And we are live. There we go. Thank you very much. Thank you very much for joining. My name is John Davies. Of course, you knew that already. And welcome to our 0800 report from Cabo San Lucas, beautiful Cabo San Lucas, ahead of day two of an abbreviated week 25 of the campaign, the 21st of June, 2022. I want to thank everyone for joining me. How the years come and go. I started these events on live from the steps of the Fed 2019. And it's just remarkable how we've grown, and I do really appreciate the support as well. Today, first of all, I want to thank everyone for joining me. And of course, if you're new here, I hope you make this part of your regular daily journey online. Remember, I'm selling nothing here, pardon my term, but selling nothing, just trying to give back to the investment community as I have throughout my career. And if you are one of our regulars, first of all, of course, Perior Mama, my beautiful Anusha Karsis, my clientele, investors, family, friends, McNeek, and of course, our hunting party, whom I'm speaking with on Telegram, hence these silly earbuds. I do, as always, appreciate your support. Remember, there are no rules here other than professionalism and gentlemanly. Professionalism matters, as it does decorum, gentlemanly and ladylike behavior. We have to get rid of the three real viruses in society, the constant sugarcoating, literally and figuratively. And that is one of the reasons why we're in much of the problems today. We have sugarcoated everything for the last 60 years. Say what you mean what you say, in a professional, polite, and courteous manner, and all is fine. Let's get rid of the pandering, particularly from politicians. Matter of fact, let's get rid of pandering politicians in the geriatric cases running for office. Let's have young, vibrant leaders who lead with principles. Maybe we'll restore something very important to me: God, family, country. And furthermore, let's get rid of the endless political correctness. Political correctness is not being polite. It's actually being silenced often. Say what you mean what you say, in a professional manner, professional courtesy, gentlemanly or ladylike behavior, and all will be fine. Matter of fact, for the gentlemen here, do remember, chivalry isn't dead. Yes, manners really do maketh a man, and around here, doors are still meant to be held. Okay, let's get this rolling. Pardon me. Now, as we look into this day, the first things I want to emphasize, as we got through last Friday, and we had a fine, solid session to close into the weekend. If you recall, the week before, I was mentioning I'm expecting a bit of window dressing this quarter as we approach this quarter end. And this is very concerning for myself, and I'm going to have to highlight this on a daily basis on this, make sure that everyone is aware. I'm expecting window dressing, but this window dressing from this period, I believe is going to extend us to that top band where I was saying that around the 4,200, we probably have, that will push us beyond that top band. As we get closer to that top band, I'm expecting a complete matumbo rejection. So be very aware. So I'm expecting this market to have some window dressing. It could be a concerted run, but that sets the stage for an enormous pullback. Don't get caught in the whipsaw. Do remember, I've suggested for quite some time, this market, better valuation is around 35.20 to 37.20. I would have liked to seen it hold in the bottom half, but near that bottom half, let's say, of that channel, that 200-point channel. But unfortunately, I do believe this market is going to find a deeper base around 3,200 this year. Markets revert to mean 15.57, wait to 13s. Okay, I wanted to emphasize that right off the top of my head before I forgot anything. And I'll be saying that and emphasizing that obviously a great deal. I probably will try to hopefully remember to say that on a daily basis. I don't bother writing things down on Twitter anymore, but for those who attend, please keep that in mind. I'm expecting a run up, and then that sets the stage for what invariably will prove to be a trap, a bull trap, and obviously retail investors will be exposed to quite the bloodbath again. Okay, first of all, let's see who we've got here on Twitter, on YouTube. First of all, again, Periormama, Justin, thank you very much for joining us. Carl, great to have you here. Alan, thank you very much. And there's the young gentleman in the jet black suit. Christopher, great to have you here. Thank you very much. On Telegram, our hunting party, from the great state of Texas and beautiful Dallas. Brian, thank you very much for joining us. Hope all is well. There's Cayenne from the West End of London. Hope all is well, my friend. Greg, thank you very much for joining us. Hope all is well with you and your beautiful family. Eric, great to have you here. Thank you very much for joining us. Anthony, great to have you here as well. Thank you very much, and thank you very much for your offer. I'll certainly take you up on that offer with regard to assisting coding of my app in some time. Romeo from beautiful Vancouver. Hope all is well. Thank you very much for joining us, and hope you had a wonderful weekend. Nick, thank you very much for joining us. Hope you and your family had a wonderful weekend. Cody, as always, thank you very much for joining us. Hope all is well with you. I wish you were able to share those options expiration Fridays with me still, but maybe in time. We had a lot of fun, didn't we? Thank you very much. Keith, great to have you here. Thank you very much for joining us. Pratik from beautiful Australia. Hope all is well, my friend. Thank you very much for joining us. There's John. Thank you very much. And thank you very much for those well wishes, John. Very, very appreciative. Thank you very much for joining us. To Drew, it used to just be up to 95. Thank you very much, for my friend, and for the messages this past weekend. I hope you and your beautiful family enjoyed a wonderful Father's Day. Thank you very much for joining us. And there's Dominic from Germany. Dominic, thank you very much for joining. Hope all is well, and hope all is well for you going forward into the future. I've been hearing some unsettling things going on in Germany recently, and like all of us, I know, speaking on behalf of all of us, we want to make sure your rights and civil liberties are maintained, restored, let's say, and some sanity goes in some of your political policies. But thank you very much for joining us, and certainly for those very kind well wishes. Okay, let's go into this market right now. Again, mind the whipsaw here. Look for that quarter end window dressing, but this is really going to set the stage for a whipsaw, which will certainly be deeply problematic for many an investor. And I think it sets them up to get towards that lower band, which I've been saying for the 52 week of 3,200. We can get a run up here easily into the upper top part of that band that I've been suggesting, the 4,200 range, and maybe even slightly beyond, but then it sets the stage for an uncomfortable period for investors. So stay tactically sound here. Okay, let's go back, and we're going to take a quick look at the market on Friday, and it was the big sideways with the Dow off a modest 38.29 to 29,888. NASDAQ was off 152 in the green of 152.25 to 10,798, and the S&P bounced off what would amount to presently the 52-week low, bounced off that to close up 8.07 to 3674. Pre-markets, things are looking very favorable right now, with the Dow having an implied opening of 407 points, implied opening a NASDAQ of 154 points, and S&P implied opening up 52 points. I want to remind you that on Thursday we have BlackBerry's, a much anticipated BlackBerry's earnings, and we'll be watching that closely. It's been a very volatile situation and makes for a very comfortable situation of scalping out the decay of option premium. As I just noted on Twitter with one of the Fed's members, Fed members, Bullard noted, quote, "We don't have as far to go on QT as it might seem." In my opinion, this is just those early hints. We've had others, but the early hints of the much anticipated pivot from the Fed, pivot from the Fed, and what will eventually be the whipsaw of the greenback. This is going to take some time. Don't expect it to happen overnight. But again, combined with other selling of U.S. Treasuries, we're going to watch the U.S. dollar make a concerted southbound move. And it'll be a very uncomfortable move. And I go back to that period when I look at the Fed's direction right now and their management. I go back to that 16-month period before President Reagan, the great President Reagan's inauguration, where the Fed completely messed things up. And we saw the U.S. dollar plummet some, if I recall correctly, either 42, I think it was 42 or 45% against the yen in a 16-month period. Okay, let's take a look at this right now from a technical standpoint, and I want you just to give this some thought. There's a lot more things going on here in technical than technicals, but do remember where the market closed at 30. S&P closed at 36.74. We hit the low on Friday of 36.94. That was our 52-week low. Our deeper support 36. This is just pure technical. 3638.62. Call it 3639. Watch the 14-day. The 14-day RSI at 30% at 36.20, 26.27. Thereafter, the second line of support is 36.02, and the third one is 35.67.85. Remember, I still believe this market is a better valuation of 35.20 to 37.20. That upper part gets you around 16 times forward earnings. It's pretty close. A pretty valuation, pretty close to the mean of 15.5, a historical mean. But again, as I've been saying, the markets will revert to mean 15.57, but you want to wait deeper 13s, because certainly one must also give thought to in a deeper pullback, this could actually move to single digits forward earnings, a very deep pullback and an uncomfortable one of the ages. But this stage has been set by hellacious political policy of recent and the lack of real true management of our economy. From a resistance line, remember, from 36.74 today with the market deep in the green, watch the resistance of 37.09, 37.44, 37.43.93 to be precise, and thereafter 37.80.16. Again, I think this is my third time I remind you, but I do expect this market to bloat up window dressing, and maybe we even get towards that upper part of that 32.42 to 32 to 4,200 range I've been suggesting for the year, hence 4,200, possibly beyond, before that jaws collapse, and what will amount to a very hefty bear trap that will be very bloody for many an investor. We're going to tighten our hedges here as this market bloats up. Just a little reminder. Okay, now looking at our commodities desk, and it has been an intriguing session here, and I'll go through some of the things that also yesterday the Canadian markets were open, and it made a good opportunity to do some shopping, let's say, on the oil and gas sector. Right now, however, we have the dollar whipsawing around off 0.35 to 104.35, but it did get to a session low of 103.94. That was an intriguing move. As I said yesterday, we did some shopping on the Canadian exchange in the oil and gas sector, made for the standard ones. I'll go through it in a second. But however, right now we have WTI up $2.53 to 110.52, and Natty is giving off nearly 4%, nearly off 0.259 to 6.85. Now, in our metal futures, first of all, as far as on our shopping on the Canadian side, it's the standard, let's say, the usual suspects that I've talked about often. And let me just give you, I'll just give you this real quickly. Where was that? Some of the standard ones that we think are really undervalued and make for tremendous option plays. MEG, ARX, WCP, obviously SU is extremely undervalued in our opinion, and VET made for a very good little play. So I want you to keep that in mind. Again, remember, MEG's ARX, WCP and VET, as well as the standards SU and CVE and C and Q. Okay, so that's where our shopping list was on Canada and the Canadian markets yesterday. Within our metal futures now, copper making a very solid and important run. Copper really puked off heavy on Friday, and it wasn't looking too good yesterday in thin trading, but made a good northbound move right now, up 0.016 to 4.028. Copper is certainly in a danger zone here, and if we get any more concerns and any more hints of shutdowns in China, it will certainly send copper reeling. But however, again, today we're up 0.015 to 4.029. Silver points up 0.058 to 21,645. I'll find that little link I posted a while ago, or a commentary. I do expect silver, to from that period to make a run through to mid-July of some approximately 5%. Gold giving back some ground today. After a very solid close to the week, off $4.20, but only a modest $4.20, 1836.40. We'll be watching if gold makes another solid run towards that what seems to be an 1850 pivot line. Now, with regards to this modest easing of gold, I would say, off $4.10. Volume has been very choppy and contained through most of the evening. And for my volume, with the exception of in the last, say, hour, been near untradeable. So I just want to bear in mind that we'll be looking at gold right now, and there certainly are some very good situations. And in my opinion, precious metal miners have never been more at a more advantageous and fundamentally solid period to invest in. Okay, that's about where I want to conclude. This time last year, I gave our early morning report from Mexico City as I was celebrating my 60th birthday. And here I am with a wonderful group of people here for my 61st from Cabo. And I do really appreciate your kind support and everything that you've done for me since we started these meetings from the steps of the Fed in November 2019. And I hope we have many years to come. So on that note, I'm going to sign off. First of all, for everyone on YouTube, I hope I was very clear where I expect this market to sort of bloat up the window dressing, but how susceptible it is thereafter for a pullback. I want to make sure everyone's covered, are clear on that, and how we can safeguard ourselves from that pullback. We'll discuss that more tomorrow and obviously through the coming days. But again, thank you for those on YouTube. Thank you very much for joining me. And just that final reminder, 2022, be the hunter, not the hunted. Thank you. Bye-bye.